What a crazy day. Markets doing a complete U-turn. Dollar through the highs, back into the lows. Cable through the lows, back into the highs. Equities back above 2% on the day right now. I'm here to break that down in this video and talk about the madness of today's CPI prints and why things U-turned the way they did. What is going on, everyone? Happy Thursday. Welcome back to the channel. What a day. What a day for volatility. First, you obviously had the inflation print at 130, the most precedented release this year, purely because that shows us where the Fed stand. If they're going to be continuing on their path or slowing down. The figure obviously coming in very, very firm, as you can see over here. Very, very firm release on inflation. There again, back and forth from the ECB, from the IMF, from the Bank of England. You know, it's chaos. You got the UK government talking about a U-turn on their tax bill. You got a fiscal plan coming at the end of the month. Honestly, shambles. Absolute shambles. The current move in the dollar does not represent the current narrative. So please do keep in mind what is actually on the cards. As it currently stands, 100% chance of the Federal Reserve raising interest rates by 75 basis points in November. November 2nd, the Fed have their next interest rate meeting, and that is fully expected and fully priced in. Looking at dollar, looking how dollar's reacting, I think there's opportunity here for us. I think amidst all this chaos, there is risk reward. It's up to us to find it. So let's jump onto the charts. Stay tuned in the video. I'm going to run through so much. Right, as we know, dollar, the forefront of my analysis every single day. I had this range on a 4-hour time frame drawn on where, and I'll just show you on the hourly, we've had peaks and troughs out of this area. Early on this week, we had the dip below on the expectation that inflation is coming out lower. Today, we had the dip above on the actual release. Smack bang straight to the bottom once again. Now, this was off the back of the UK announcing that they're doing a complete U-turn. You got the Bank of England announcing that they're going to end all temporary assistance to the bond market tomorrow, with the likelihood of them raising interest rates with an emergency interest rate hike of 1 full percent. So that's currently expected. Now, with that being said, we know markets move in peaks and troughs. We know they take a little bit from here, take a little bit from there, and that is what fills the whole market. So traders and flows running into pound for tomorrow caused the sell-off in the dollar. You look at pound, you got cable up 240 pips on the day. I actually got stopped out on my cable short, which I'll run through in a second. You have pound yen hitting the highs of 400 pips on the day. You got GBP AUD as well, 360 pips up on the day. Now, all this optimism, all this clarification, shall we say, from the Bank of England, right, with the U-turn from the UK Chancellor, flows are flowing straight out of dollar, straight into pound. You had the likes of the ECB announce that they too want to be raising interest rates at their next meeting by 75 basis points. So right now, everyone, if you're watching this, please know it is a tug of war between central banks. Our job is not to marry a singular bias. Our job is not to emotionally react. Our job is to adapt. We have to adapt to the current conditions. That being said, flows into euro, flows into pound. Unfortunately, you're going to have that sell-off in the dollar. If you have a sell-off in dollar, what happens to risk? Risk rallies. Simple economics, right? So dollar obviously trading lower, risk massive rally out of the lows. As we can see over here as well, we had that drop on the release, right? Massive drop. S&P and the Dow were down over 2%. Gold, same thing. Gold broke 1650. I've been reiterating gold on the channel for quite some time now about how commodities are sliding off. You had oil breaking back below $86 a barrel. A nice little correction there as well across the board. For myself, I see this as opportunity. As I've said before, I remain a dollar bull. It is simply where I'm a dollar bull from. So as I had my analysis on, should inflation have come out less than expected, so a peak in inflation, which could have signaled a stall in interest rate hikes, right? My technical narrative or technical bias running in line with that narrative still stands, right? I would love to buy dollar from 111.60, right? So should the dollar come back into anywhere into this region that I've highlighted, I would love to start buying dollar once again. Even if you drew your fib from this prior wave low, it still adds up, still within our area of interest. But for myself, I want to remember, and I'll show you on the economic calendar actually, the Federal Reserve right now have their interest rates at 3.25. If they are looking at taking rates to 4% in the November meeting, which is fully priced in, dollar is going to positively react to this. So whatever happens on the short term, just know that that's flows going into euro, flows going into pound for what they have going on. It does not change the narrative for dollar, and it shouldn't change your bias either. So for myself, your dollar still remains bullish, still favoring dollar longs, which will be in the likes of euro short. I currently have this alert drawn on at the 80 and 98 300 handle. Should we come back into that area, I'm going to monitor price. Cable earlier on today, I had my first initial short right from those highs. I tucked my stops briefly above the high at 113.05. Got wicked out, right? Got wicked out. I wanted at least a retest of 111 to start taking partials, because that would have been a big trade for me. 150 pips should that have played out. We obviously bounced off this technical region and shot straight back up on the announcement from the Bank of England. Right? So very, very interesting times right now indeed. What do I think's going to happen over the next, let's say, what's today? Thursday. So the next day and a half's worth of trading. Obviously Friday tomorrow. So we're going to have some position squaring. If the Bank of England do end their bond buying program tomorrow and they do announce an interest rate hike, we may see cable head higher. We may see the likes of 114, 114.50. However, if that's already priced in now, I'd like to make that very clear. This move that we have now, if that's overly priced in and they don't follow through with a hike and they just pause on their bond buying, cable is going to tank. Cable is going to tank. So you want to always create a scenario of tug of war. Right now, every single central bank is going at it with each other. And that's called relative value. Who's strong, who's weak, you want to match them together. So don't let this confuse you at all. The dollar narrative's still there. The cable narrative's still there. The trade is still there. It's all about timing now. So for myself, dollar, if we were to come into anywhere between 112 and 111.70, I'm happy to buy dollar again. Equities, the same thing. If the Dow had to come back into 30,000, I'm happy to start looking at it for a short position. This move is obviously definitely irrational. I've seen a lot of people trying to sell this today, which would have hurt a lot of people. Right? Today would have been an emotional day for a lot of people if you didn't take profits. The thing with the volatility we have right now, if the market gives you money, take it. Take it. Honestly, take it. Euro yen was another one that I was in. Stops hit me at a break even, unfortunately. But the size of the move, right? The size of the move. I want to just measure the move with everyone to just reiterate what I'm actually saying here. So pound yen was the reason every yen pair lift off. No other reason, right? No other reason. We had pound across the board. So if you take that as your main component and you match it up against the other, pound was the reason yen crosses rallied. A 400 pip move on pound yen warrants every other yen pair to move. Euro yen, to briefly run through this, simply for educational purposes, Euro yen was in an area of interest, right? Area of interest. And price, obviously, my initial stop loss this morning was at 142.80, which wicked me out. I re-entered again on the highs because I felt this being a squeeze. I felt the fact that, this little stop hunt over here was irrational. I did still like 143 as an area of interest, right? It still lines up with our area and our fib. But for complete transparency, I will say my initial trade stopped me out, right? It did take me out. That I made the group aware. I'll even put it over here just for transparency. The trade did take me out. My second entry on this, I rolled my stops to break even because I have a technical rule. If two previous higher lows are broken, I have to lock in some gains. So these two previous lows were broken with this initial sell-off. But I'd like to teach everyone a lesson here. When there are such periods of high volatility, you're going to get your normal move just in a shorter space of time, right? So Euro yen fell 120 pips in what? 30 minutes. Take profits off the table. Volatility just means you're getting the same size move in a shorter period of time. Lock in those gains. So Euro yen for myself, very, very irrational move to the upside. Looking at this on the daily time frame, I still favor this to the downside. I remain firmly with my bias. Should the European Central Bank obviously come in and raise rates, which they can't afford to do anyways, it's just a death sentence in my opinion, then we may still have this higher. We may see it higher. But for myself, when trading the narrative right now, it's tug of war. You got to trade that position at that time with what's happening right now. You can't get emotional on what has happened, on what you wish has happened, or what could have happened, what should have happened. If you have that mindset, trading is not going to work for you. You got to shrug it off like water off a duck's back and carry on. You just have to. So for myself, I still favor this to the downside. There is no risk reward, in my opinion, buying something on the high. So if you want to look at that, look at a different euro. Look at Euro Aussie, right? Look at something else. But you don't want to be looking at a yen pair, knowing that we may have some intervention. It doesn't happen, and then you're stuck in a trade that just isn't going to work out for you. So for myself, Euro yen definitely, Euro yen for sure, cable for sure, and the likes of dollar. Dollar, in my opinion, shouldn't be at these levels. It honestly shouldn't. So the fact that this has happened, we can't undo it. We can't hope that it didn't happen. We got to trade with what is the market showing us right now. So cable right now looking extremely exhaustive out of the 113,500 level. In terms of structure, price is still bearish in my personal opinion. I do still see this as a relevant area of interest to possibly go short. My only concern is if the Bank of England do follow through with an emergency interest rate hike tomorrow after they end their bond purchasing program, we may see a spike and a rally higher on cable. So do just trade safe on that one. But I just wanted to make this video to make you aware that these types of irrational moves can happen. You want to know that when you're trading fundamentals and you're trading the narrative, it's constantly a game of tug of war of which currency is stronger than the other at that time. Right now, every single central bank is trying to control their monetary policy by raising interest rates. They're trying to take care of their own pockets. So you're constantly going to have these rallies between currencies. Your job is to capitalize on that by taking what it's given you as and when that happens. So lesson from this video, volatility is the exact same size of move in a shorter period of time. So use that to your advantage. Guys and girls, I hope you enjoyed the video. Do like, comment, share, subscribe. And obviously, I'll see you on the next one. Take care. Bye-bye.